What is going on, guys? So I wanted to share with you all some cheap stocks right now that are a serious value. But these just aren't picks that are doing well during this crazy run-up. Oh no, 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 no. These are stocks that will also thrive if we have to shut down the economies again, which if, things continue to get worse, it is a possibility. And I said cheap, so you don't need Tesla or Berkshire money to buy them. Just don't get a Starbucks coffee and buy one of these stocks instead. So let's get started right now. Welcome back, everyone. In this video, we will cover the 5 cheap stocks I'm looking to buy right now. There is a growth play, there's an EV play, even a dividend play, and no, it's not a tanker stock. And my last stock will be controversial, but I think it could be the pick to rule them all. So stick around for that one. And if you're new, don't let the shades fool you. They're just for fun. So don't be so serious. We like to have fun on this channel. For example, I appreciate everyone listening to me in my last video and telling me that I suck. Some of you guys are funny, I have to admit. They were pretty good. I'll link that video at the end if you have no idea what we're talking about. So let's tackle the algorithm again, but this time by hitting the like button 33 times. And yes, I tested that. And you can still tell me I suck or whatever clever comments you guys come up with. Okay, so the first super cheap stock I'm targeting, that would be Arcimoto, or ticker symbol FUV. Now I know my Tesla fans and other EV stock fans may get a little riled up that I did not pick their favorite, but hear me out on this one as there is a logic to my pick. And Tesla's way too freaking expensive for this list anyways, come on. I kind of view them as like a mini Tesla. They're involved in many different EV markets. And I just like the names of some of their stuff. I mean, the first one is Deliverator, which is a last mile delivery solution that is customizable to carry a range of food products. I just want to drive something called a Deliverator. It just sounds cool. The second one is the Rapid Responder, which is designed for specialized emergency, security, and law enforcement services. Production of those vehicles is set to begin at the end of this year. I admit it, it's obvious at this point it's probably not going to be the next Tesla. But that's not why I like the stock. I'll let every other car company chase Tesla. Good luck with that. I like this stock because unlike many of the other speculative EV plays out there, you guys know exactly who I'm talking about, Arcimoto is primed for a takeover, which will shoot the stock up huge. And I'm sorry, I hate to say it, but all the other EV players everyone is so excited about are not all going to make it. That is just the truth. I would not be surprised at all if in 5 years, only a couple of those remain along with Tesla. But remember, there is more than one way to cash out big on a stock investment. And Arcimoto is positioned to take advantage of that as a takeover candidate, unlike the other EV stocks that are not as well positioned to take advantage of that option. But if EV speculative growth stocks are not your thing, then let's go in the opposite direction and look at a dividend play that I'm really excited about. Like super pumped. So cheap stock number 2 I'm targeting, that would be Aegon, ticker symbol AEG. I have no idea why I chose stocks with names that I cannot pronounce correctly. It doesn't get any better from here, I'm sorry. Aegon's headquarters is in the Netherlands, which, by the way, is awesome if you've never been there before. Beautiful people, beautiful country. I cannot wait till we can travel again. They're a global, world provider of life insurance, pensions, and asset management. They're like really old. They're like 175 years old, and they got about 24,000 employees and about 30 million customers. But more importantly than that, they manage around $1 trillion in assets. Trillion, trillion. So despite the cheap price, it is no small company. And you may know it as Transamerica, which is what it's called here in the US, which makes up about 2/3 of their revenue that they get is from the US. In addition to Europe and the US, they also operate in China, India, and Japan. So, very small markets for sure. And I was being sarcastic. Those are massive markets. Now they have adjusted their guidance down as the illness has affected their business big. But that's not what I love about this stock. What I love is that they have a super strong and safe balance sheet. And from a pure valuation standpoint, having a PE ratio of over 3 but below 4 means it's not one of those stocks that is overvalued like so many stocks are right now. I mean, really, who wants to buy a boring pension and life insurance company that pays a dividend, is undervalued, has great financials, and manages trillions of dollars when you can buy this? Man, what the heck is going on out there? Really? But hey, it's my gain. So I will be adding some shares of this stock soon, since I actively am trying to increase my dividend part of my portfolio to meet my transitioning goals. I will post those trades in real time on Patreon like I always do, and you can download the wealth tracker too. So check me out over there. So cheap stock number 3 that I'm targeting, that would be Zynga. Ticker symbol ZNGA. Zynga's portfolio of popular games, well, I don't play them or I've actually ever heard of any of those games, but plenty of other people I know had heard of all their games. Combined with some truly impressive recent growth, make it one of the best cheap stocks to buy under $10. Look at the chart for the past year. Just steady growth across the board. And unlike most stocks, they didn't take a bath in March like everyone else did. So if we do shut down again, I think it's a solid play and has proven it can perform with no shutdown or during a shutdown. Stocks like this will start increasing in popularity as the new illness era of stocks has shown who can and who cannot perform under extreme adverse conditions. If the company merely treads water for the rest of 2020, I think it will soon be priced out of the sub $10 per share stock club. But do your analysis and decide if it is right for you. And if you don't know how to do that, I got a course coming out on that soon. Just hang tight. So stock number 4 that I'm targeting, that would be Sirius. Ticker symbol SIRI. They enjoy a near monopoly on satellite radio. You know, and back in 2018 when they got Pandora, helping to reignite their revenue growth, its audio products now reach more than 100 million people, which is kind of ridiculous when you think about it. Sirius is consistently profitable, and it just approved of $2 billion in stock buybacks to take advantage of, you know, the modest decrease in price due to this whole illness thing. So while other companies cannot afford to do buybacks or, you know, aren't allowed to do buybacks, Sirius is doing it, which just speaks to the strength of the company. But the illness has hurt the company, especially the decline in auto sales, which, you know, since many new cars come with it pre-installed already in it, makes up such a huge part of their revenue. So I actually think it will trade down until we're out of this whole illness situation despite its recent run-up. And of course, when this is all over with, we'll see those revenues spike right back up. Add in the move of major podcasts to other platforms like Spotify, and this could be a place where they can look to add some significant names and move towards really expanding into that line of business and increasing revenues. I know some people are downplaying that as a big move, but to me it's a major shift that will shake up the industry, in my opinion of course, and Sirius has the capital to take advantage of it. So the final stock I'm targeting, and if you have followed my channel for any length of time, and shame on you if you still aren't subscribed yet, you know that I like my stocks frothy. And it's even better when they're a little controversial. So the final stock I'm targeting is Century Casinos. Ticker symbol CNTY. I know, slow down. I do not like casino stocks either. And right now this stock has already 4x'd from its March lows, which for me is another no-no when going to buy. But hear me out here. It does make sense as a wait and see play. It is a $15 million gaming company based in Colorado, again another really cool place, owns and operates racetracks and casinos in the US, Canada, and Poland, and they also have a ship-based casino boat, which those can be fun for a night too if you've ever been on one. But you're right, the illness has severely hurt Century's business and its stock price. That said, at current levels, the stock has basically 4x from its March lows. So it shows this company can run up quickly, and it was an $8 stock prior to the illness. But I would not buy it right now. Let me repeat, I am not buying it right now. However, if we go into a second lockdown, I will be adding some shares as it will inevitably fall again. And here's why I think I'll be adding. No one knew what the heck was going on after the first fall in March. This was unprecedented and everyone was just guessing. But now we have a much better idea of who stands where and what is going on. And more importantly, what stocks are going to perform well and not perform well. So if another lockdown happens, and everyone is busy chasing all the craziness with Tesla or the other EV stocks, or trying to guess the next great lockdown stock, or buy another bankrupt company because for some reason that seems like a good idea to some people, I will be watching and looking to add stocks like this one that will get destroyed in the short term, but have shown they can survive as the lockdown eases back up and we all get back to business. That makes this an ideal speculative play, in my opinion, for my portfolio. So consider joining my Patreon if you want to see those trades in real time and get direct access to me, which you cannot do anywhere else. And show your support for the channel by liking the video. But I think it's going to be a crazy next few weeks, so make sure you are subscribed, which you can do right there, so you can get the truth on all the craziness. And follow me on Instagram if you want to see me fall flat on my face on that. And here's the video I promised that explains why my subscribers say that I suck. Thanks.